Hello everyone, you're on the Private Investor channel and my name is Pavel. Spring is here, which means it's time to prepare a tax report for last year. In this video we'll go through the important topic for all who invest via interactive brokers. How to correctly calculate your profit and the tax you need to pay. Since IB doesn't handle tax reporting for its client, you need to do all the calculations by yourself. In this video I will guide you through the process step by step. How to download a report of your trades and income for the year, how to convert amount into your local currency, how to calculate profits and taxable income correctly, and what additional income and expenses you should consider. I will explain and show everything in details. Plus, under this video I will share a template to help with the calculations. So make sure to like this video and subscribe to the channel, and let's get started. The goal of this video is to show how to get all the necessary data from interactive brokers for the tax reporting. Here I will focus on the preparation stage, gathering and processing the information. I guess this guide should be useful for most investors, regardless of where you live. Later in this video I will show an example of calculations, and as I mentioned in the description I will share a file with a template you can use. In the next video I will explain how to use this data to fill out your tax declaration, and that process depends on your country where you live. But for now let's go through the step of preparing your financial data. The first step is to get a report with all your transactions for the year. Here is how to do it. First of all, log into the Interactive Brokers client portal, then go to Report section. In the top menu choose Performance and Reports, then Statements. You can either use the default activity report or create custom report with more details. To create a custom report, go to Custom Statement and click plus. Then you need to fill the form. Give the report a name, set statement type to activity. In section select all to include all available information. In profit and loss choose MTM and realized PL. Set all yes/no switches to no. Choose CSV as a file format. Set the period to daily. And then in the end save this template for future use. To download data, select either the default activity report or your custom one. After that you need to set the date range to the full previous year and download the CSV file. It may take some time for the report to generate, but once it's ready you can download it and start working with the data. The downloaded CSV file contains a long list of rows, so the next step is to turn it into an Excel table for easier processing. Since IB reports are usually in USD, but the tax reporting usually requires local currency, you also need to convert all transactions using the official exchange rate from the previous day, T-1. You can always find those rates on your country's central bank website. Then you need to apply the correct rates to dividend payments, interest payments, securities sales, and all the fees. After this, you will have all amounts converted and can move to organizing the data. Investment income usually falls into two categories or two types: passive income, like dividends, and capital gain, for example from selling stocks. These categories often have different tax rates and rules, so we will look at them separately. And first of all, let's consider passive income, dividends and interest. You can find dividend data in the report here. Withholding tax, already deducted by IB, is listed separately. Interest earned on cash balance is also considered as a taxable income. Then, for tax purpose, you need to do the following. Collect all dividend payments, convert them to local currency using T-1 exchange rate, identify taxes already withheld by IB and convert them as well. Apply your country's tax rate. For example, in my case, in Poland, it is 19%. Then you need to subtract the amount already withheld by IB, and actually you will get the remaining tax you need to pay. I will share an example of calculation in video description, so check it out if you need more details. The next income type is capital gain. Calculating taxes on stock sales is more complicated. To do it, you need to track the following: when and for how much you bought the stock, when and for how much you sold it, and for sure you have to remember about conversion rate for both transactions. The FIFO method, first in, first out, applies here. It's meaning the oldest purchases are considered sold first. So to calculate taxable profit, you need to do the following: identify the selling price in local currency, find the purchase price in local currency, and subtract any broker commissions. The result of this calculation is your taxable capital gain. If you sold something at loss, this amount can be often used to offset profit and reduce your tax bill. I would say it's a very good option for all passive investors. Let's summarize. To properly calculate your investment taxes, follow the next steps. Download your annual report from IBE, convert all amounts to your local currency using correct exchange rate, calculate profits for each sale transaction, accounting the cost and broker fees. Separately calculate dividend income, since it may be taxed a different way, and part of it was already withheld by IB. Once you have completed those steps, you will have all the necessary information to fill your tax declaration. In this video, we went through the process of preparing investment data for tax reporting. We covered how to download reports, find key information, and calculate everything properly. In the next video, I will show how to fill out a tax declaration using this data. If you found this video helpful, please like and subscribe, so YouTube recommends it to more investors. And please feel free to leave any questions in the comments. I will try to answer them in the future video. Thanks for watching and see you in the next video.